Hello, this is Dr. Paul Cottrell. I am going to be going over the updates of the market, give you my perspective on what is going to be happening with certain asset classes. I am recording this on 7/19/2026. Please help support the work that I do by going to my website, the-studio-reykjavik.com, and you can purchase the great products I offer. You can also watch the live streams that I have under broadcast live, read some generated news under broadcast paper, and listen to archived audio files of my podcast under broadcast radio. You can also donate on my website on the bottom of the homepage by donating through Stripe, PayPal, or Buy Me a Coffee, just by clicking these links. Please help support the work that I do. All these videos are for free. You can also get great products that I offer under my store. You can get my ebooks. I have ebooks pertaining to finance, also some scientific books about genomics and endocrinology. I also have a book on artificial intelligence. So take a look at those ebooks. I also have classes that you can sign up for. You get lots of material, lots of PDF files, lots of videos to learn about pulmonology or immunology. They're only $25. You get a password to log in to the class. You just log in under classes, pick the module you purchased, and learn that material at your own pace. You get a lot of information, a lot of PDF files, and a lot of videos. So please sign up for those classes. So let's talk about some of the supplements that I offer to help slow down the aging process and to boost up your health and wellness. I have structural nanosilver toothpaste. It's a very high quality toothpaste that will whiten your teeth, freshen your breath, reduce inflammation at the gum line, and neutralize because it has the structural nanosilver. Max 35 or Max 14 or even Cleanse. Take a teaspoon a day every day and it'll help to boost up your innate immune system. This structural nanosilver gels, you can get it in a tube form or in the quick dispenser called Renew. Very high quality gels. They're dual purpose. They'll help to heal a wound. You can use it as a daily skincare, and you can put it on your hands and lightly coat your nostrils. It stays active for 5.5 hours, perfect for the cold season, the allergy season, or the current situation that we have with the fires that are coming from Canada. The lozenges, perfect for allergy season and the cold season. You can get it in Manuka honey and in orange splash. They're made from structural nanosilver. It'll help to neutralize and protect your oral pharynx. The digestive end, the probiotic that I have here is a VeggieCap version. This Digest probiotic. It's a great way to help boost up your gut biome and improve your metabolism, your skin, brain function. I also have C60 in a variety of configurations. You can get it in a 2 ounce, a 4 ounce, or an 8 ounce configuration. You can get it in extra virgin olive oil, avocado oil, or MCT coconut oil. C60 is a very potent antioxidant. It's going to soak up those free radicals, boost up the health of your mitochondria. You'll have more energy. C60 will also help with your endocrine system, your immune system, cardiovascular system, and brain function by soaking up free radicals, bringing down stress in the cells, bringing down inflammation. Take a teaspoon a day every day. Vitamin D3, it's a dual purpose vitamin. It'll help with building denser bones. It'll help with your cardiovascular health and also immune system. Vitamin C and magnesium helps with brain function, immune system, and skin health. Omega-3 is going to help to improve your cardiovascular health. Ashwagandha root controls your cortisol levels and blood glucose levels. Good Night formula will help you to get into 3 to 5 cycles of REM sleep and deep sleep. It has tryptophan, melatonin, GABA, and passion flower. So you can get into those cycles of REM sleep that will help to detoxify your central nervous system. to be well rested, and to consolidate memory. Good sleep slows down the aging process. This probiotic is a powdered version of the probiotics. Again, taking a good probiotic is very important for your overall health. Resveratrol helps with skin. It helps with the basal layer of the skin. This stacks really well with the C60. Resveratrol also helps with youthful gene expression, soaks up free radicals, and helps boost up the health of the mitochondria so you have more energy. Vitamin B complex also helps with boosting up the health of the mitochondria. The first four B vitamins helps with the electron transport chain, so you build more ATP. It helps with cellular metabolism and to protect neurons. Turmeric, the vitamin that helps to protect the neurons, is B12. The turmeric will help to soak up free radicals and bring down inflammation. And when you take the turmeric, the ashwagandha root, and the lignans together, that's a very powerful stack. Magnesium and zinc boosts up that immune system and helps with brain function. Lignans will help with the immune system and endocrine system, soaks up free radicals and brings down inflammation. The collagen will help with your skin, improve your skin health, stacks really well with the vitamin C. It helps to cross-link to build up the dermal layer. It also helps with musculature, bone density, your hair, your nails. Digestive enzyme complex helps to reduce the load on your pancreas so you can digest your carbohydrates, proteins, and lipids. Clarity factor helps with brain function and over time improve that positive neuroplasticity so you're thinking faster and have better memory. Olive leaf extract helps to bring down inflammation and also control that lipid profile. And when you're doing that, you're helping your immune system and your cardiovascular system. Zeolite will bind to heavy metals, toxins, and chemicals and let you urinate them out within about 6 to 8 hours. Take 3 small drops underneath your tongue and drink filtered water. Myotrol will help to build muscle, reduce atrophy. This is perfect for individuals that are 40 years of age or older, male or female. It has polyphenols, flavonoids, and lignans to help with the gene expression to build muscle. Boomer Boost has 68 nutrients to improve your health. This is a great supplement to take. You can see on the screen here, it has the vitamins, the minerals, and the other supplements that will help to slow down the aging process. And it targets many different systems. It helps with brain function, musculature, helps to improve your immune system and the endocrine system, revs up your metabolism, brings down inflammation, soaks up free radicals. It's a great supplement to take to slow down the aging process. And you get the vitamins and the minerals that you need. So you can use this as your multivitamin. But you get a lot more than just a regular multivitamin with the Boomer Boost. I highly recommend taking this. It will slow down the aging process. Gladiator barley and heirloom barley. These barleys will help to detoxify your body, bring down inflammation, soak up free radicals. And when you do that, you're slowing down the aging process, boosting up your immune system and your endocrine system. Now, you get one added benefit with the Gladiator barley, and it'll help you to build muscle. You can stack Gladiator barley with Myotrol to get further strength benefits. Another great stack would be taking the Boomer Boost with either of the barleys. Collagen. Collagen is a great supplement to take to remodel your joints from a sports injury or from arthritis. Collagen will block MMP3 and MMP13, so it reduces joint erosion. It also blocks inflammation by blocking EP4. It also helps to build the cartilage by using type 2 collagen and bringing in glucosamine. It can also help cushion the joint, rebuild the cushioning of the joint by using ACAN and utilizing chondroitin. It also helps to reduce pain by blocking the pain channel gatekeeper, NaV 1.7. It's a great way to remodel your joint. So please, if you have arthritis or a sports injury, take the collagen. And I have super strong relief This will help to alleviate pain very fast. It works within about 90 seconds. It's a topical. It helps with sprains, pulled muscles, tension headaches, arthritis. Okay, now I also have anti-aging boxes. I'm not going to go through all of them, but I've curated them in different price points to allow you to start on your anti-aging journey. You can get an anti-aging box or a longevity box. Like for example, a longevity box dealing with the immune system, longevity immune system box, you get the lignans, the turmeric, and the olive leaf extract. So you're bringing down inflammation, soaking up free radicals. You're helping with your endocrine system and your immune system. The turmeric is soaking up those free radicals and bringing down inflammation. And the olive leaf extract is also bringing down that inflammation and helping with the cardiovascular system too. So you get other benefits too with this longevity box for the immune system. But let's take a look at the anti-aging deluxe box. You get a lot in here. You get the Max 35, the C60, the vitamin D3, the vitamin C and magnesium, the toothpaste, the probiotics, the resveratrol, your choice of C60. It's a great way to start on your anti-aging journey. So there's many ways to purchase the products that I offer. So please help support the work that I do. Again, all these videos are for free. Help support the work by getting the great products. These are products that I use to slow down the aging process. Now, with that, I'm going to share my charts. All right, we're going to go over different charts, and I'll tell you what I think is going to happen in the near term for the financial markets. Now, keep in mind, we have some issues that are happening in the Middle East. We also have issues with the semiconductor and the AI bubble. And we also have the big question, what the Federal Reserve will do with rates. Will they lower rates or will they raise rates? So inflation is in question in the United States and also the job market. So with that, those headwinds, let's take a look at the ETF SPY. This is the ETF for the S&P 500. And what we have here is it ended up trading at 743. Now, I've been saying that the year-end target for the S&P 500 most likely will end at 7,400 to, I'm sorry, 7,800 to 7,000, well, 7,800 to maybe 8,000. That would equate to about 780 to about 800 for SPY. So I still have that target. There's a lower probability we're going to hit at 800 for SPY. There's a probability of being at 780 for SPY at year end, probably around 65% chance. It all depends on what happens with the deflation of the bubble, the deflating of the bubble for AI, which I think is starting to happen right now. I'll show you in a chart why I say that. So the near-term resistance level that we will have is the 760. 760 is going to be near-term resistance. We have a support level that's starting to look like it's starting to develop here at 740. That's near-term support level. Now we're, only 3 points above that. That could go down. Now, if we get negative news with the Middle East and a drawdown on the semiconductors, we're going to break the 740 and we're going to retest the 720. So in the near term, a support level at 740, which is not that strong, and we're going to probably retest the 720. There's a very strong support level at around 700. Actually, a little bit below 700. The fib sequence is approximately 691 or so. So 700 support level, 720 support level, 740 is support level. But most likely the 740 will break this week. So I suspect that actually the S&P 500 might actually go down more. And I think it for two reasons. The war in the Middle East is going to escalate, and we are going to see negative news about the semiconductor industry related to AI. Okay, now, or at least tech, because the semiconductor and tech are a larger, when you put them together, they fall under a larger category with this whole AI bubble. Now, so in the near term, I think the S&P 500 is actually going to go down, not up. And you also have a gap down here. So we're probably going to test the 720. This chart is the future for oil, for WTI. Now you can see that it was going down steadily because of the MOU. And then once the MOU started to fail, then it started to go back up. Now, it's important to understand these support levels here. The support level and the resistance level and the trading range. We used to, back about a week ago, we had a trading range at around 68.78 to 79.62. And we are now testing that 79.62. It's trading right now at 81.77. I suspect because of we had 2 service members killed and 1 missing in action right now. Just recently, I think it was in a base in Jordan. That's gonna probably escalate things in the Middle East, and we'll see oil probably go up more. Also, it seems as though Iran is telegraphing that they'll increase the war with the GCC. In addition, it looks like the Houthis are going to get involved and potentially shut down the strait that's south of Yemen. So because of that, we're probably going to see a trading range above 79.62, closer to 80 to 87.23. So I suspect that we're going to see oil tick up to $87 this week. So I think it's going to go up. Okay. So beware. Beware. I think it's going to be, it's going to stay above 79.62 for a while. And we'll be testing the 87.23 barrier. Most likely break it and get closer to 90. But we're going to see I think we're going to see oil go up. All right. Now, this chart is natural gas. Now, there's 2 charts here. There's two pieces of information here that's really important. The solid line is an ETF shorting natural gas called cold. And then the candles are the future for natural gas. You can see that it's starting to go down. Natural gas is starting to go down, and it should, because it's July, and July usually goes down. Last year, the same thing happened. So we should be going down actually faster than we are. Part of the problem is because of what's happening in the Middle East. So there is a trend, there's a fundamental trend to want to go down for natural gas. You also have the more use of natural gas because of AI. So that's bolstering it up a little bit, but the trend wants to go down. I would not be surprised by the time we get to, you know, middle of August, end of August, that we're at 2.5, 2.6. Right now it's trading at 2.9, but it can go up a little bit. So I think there's going to be a trading range between 3 to 2.6. And I can drop a decent amount pretty fast. And as it's dropping, cold as a short for natural gas will continue to go up. So I suspect that natural gas could go up to 3 because of problems in the Middle East and then come back down. I think there are a lot of people that are playing this. It goes up a little bit and then short it. Goes up a little bit, short it. So I think there's an overall trend of wanting to push this thing down. Fundamental value, probably 2.6. So that would mean that we have the potentiality of seeing a decent appreciation of the future price, or not the future price, the ETF price of coal. Cold, I would not be surprised if it breaks 30 again as natural gas starts to drop. But if it goes up, then cold will go down. There's some event risk with the Middle East. So that just be careful with that. But I think that the overall trend is going down for the natural gas. TYD, the belly of the treasury curve, this is a bullish a bullish ETF, meaning that if the bonds go up, if the 7 to 10 year bonds go up in price, then TYD goes up in price, and then the yields for those bonds go down because yields and price are inversely related. Now, if you notice, the 10-year bond has been kind of creeping up in the last couple weeks. And because the bond yield for the 10 year has been creeping up, you can notice that the candles for the TYD are going down. So that makes sense. Bond yields going up, prices goes down. But there's been the last 4 or 5 sessions, it's wanted to creep up again. So there's a little bit of a relief rally going on in the bond market for the 10-year, a little bit. Now, the other line here is showing the S&P 500. And I'm trying to show that how the belly of the curve is somewhat inversely related to equities when you look at it in the long term. So here, going all the way to, let's say this year, all right? So about right here. As the market was consolidating at the beginning of the year, the S&P 500, the bonds were somewhat kind of going down and then stabilized. As the market started to sell off, the bond prices started to go up. Right? And then they started to sell back down again. So the point I'm making is it's not always an inversely related. That's why we have this curve down here, the correlation. Anything at 1 is positively, anything above 0 is positively correlated. 1 is strong correlation. Anything below 0 is negatively correlated. So you can see that this month, the month of July, we've had basically we had inverse correlation between the bond market and the equity market. But for June and for part of May, it was positively correlated. So if you take a look at this, when the positive correlation started, right, the equities started to go up. You can also see how the bonds were starting to go up. So you have to pay attention to this kind of cyclical pattern of correlation going positive and negative between bond market and the equity market. It's not always inversely related. That's the big takeaway from showing the equity line here and the correlation line at the bottom. But the point here is that the 7 to 10 year ETF, 3 times leverage, the last 4 trading sessions, 1, 2, 3, 4, 5, roughly 5, that overall trend has been moving upward. So we have and you can kind of see because of the fib sequence, we have a resistance level at 23, roughly at 2341. Right now it's trading at 23.3. So it's having a hard time breaking that 2341. Most likely it'll come back down and retest the 23. So there's probably have a trading range between 23 and 2341 for this ETF. But if the equity market starts to sell off, if it starts to go closer to 7,200 for the S&P 500, if it tests that, breaks the 7,400, goes to 7,200, most likely we'll have the bonds might be going up. There's a potentiality of it going up as a safe haven. But another group of people might say oil is going to go up, inflation is going to go up, bond yields are going to go up, and then you might have this positively correlation. So if you look at this, you would think that it's probably going to go positively correlated. And if the market is going to go down, then you may actually have this go down too. So you can read this 2 different ways. Textbook, if the market breaks the 7,400 and tests the 7,200, people would go into treasuries. And so we should see it break the 2341 and potentially hit 24. But you would probably have to have a big sell-off for that, especially if it's tied into the semiconductors. If it's tied to oil, you might see the bonds go down. If it's tied to the semiconductor and AI bubble bursting, then treasuries might be, treasury yields will go down, treasury prices will go up, and TYD probably will test the 24 mark. This chart here has the 30-year yield, the 10-year yield, and the Federal Reserve funds rate. So right now we have the 30-year at about 5.09 and the 10-year at 4.57. That's pretty high. Now, some experts are saying that we could see a 10-year, if inflation continues to go up and overspending, fiscal spending keeps on going up, we may see a yield for the 10-year at 5. And we may see the yield for the 30-year at 5.5. Another thing that you've noticed is that the Federal Reserve has stayed relatively flat and their funds rate is in a range. The way they do the funds rate is in a range, and right now it's equated at 3.63. Now the spread is 30-year minus the 10-year. When the spread changes, and if you notice that since March, the spread has been trending down, but since mid-June, it's been moving back up slightly. And part of the reason is this undulation of the 10-year. I think the 10-year is moving more than the 30-year. And that affects the spread. So if we see, like, for example, it starts going up in mid-June. So if we go mid-June, right? We go to mid-June, the 10-year started going down. The 30-year started going down, but looked like the 10-year was going down faster. And then it started to go up. right? So it's starting to go up. And this is starting to go up. It looks like the spread potentially could actually move higher. Now, if that spread moves higher, then we should see a 10-year. If you're just looking at, I'm just kind of thinking out loud here. If the spread has been trending down, then the 10-year is most likely moving faster towards the 30 and compressing the spread. If the spread is decreasing, the 10 years probably, wait, let me rephrase that. If the 10-year is moving faster towards the 30, the spread is going to be going down. Now, if the 30-year is moving towards the 10-year faster, the spread could also be going down. Now, this slight increase in spread looks like that we may it looks like the 10-year is not moving as fast as the 30. It looks like the 10-year is actually slowing down in its change. And that's the reason why this spread is moving a little bit more. But if the spread continues to increase, this might be signaling that the rate for the 10-year may actually be going to be going down. Because think about it, it goes in cycles, these spreads. It's been very high, so the spread has been wide for a while. You can see the spread's wide here. It's very wide between this and this at this distance. And you can see it's starting to compress. This distance starting to compress. It'll probably start to widen again, and that 10-year is probably going to start. It's possible the 10-year starts to go down. Now, why would the 10-year go down? If there's a bubble from the semiconductor industry and there's a sell-off in the equity market and people run to treasuries, the belly of the curve for a safe haven. So we may see the spread creeping up as the equity market starts to sell off. Now, if that is true, then you should see TYD start to pop up and test the 24 and the 2024 resistance level if that happens. So if this starts to go down and this spread starts to go up, most likely it's because of the S&P 500 selling off because of the AI tech. All right. So now let's talk about VIX. Now, VIX, as it spikes, also is a signaling of a sell-off in the S&P 500. And the spikes happen with a periodicity called heteroscedastic. They're heteroscedastic. They're they're they happen periodically. All right. Now we've been relatively low in the 16, 17 range for a while. We spiked up in the beginning of June and then came back down. The whole MOU kind of kept things down and we creeped up on the S&P 500 and then the MOU ended up failing and then VIX has been relatively stable under this new set of hostilities in the Middle East. But we may start seeing a similar dynamic emerge here as we saw here. And it just kind of built up and built up and built up. I suspect we'll be testing the 20 and start trading above 20. If that's the case, then we're going to see the S&P 500 start to sell off. And when we do that, that chart for the S&P 500, we're going to be past the 740 and start testing the 720. And when that happens, we most likely will see the belly of the curve for bonds price to go up. And that means the yield for the 10-year is going to go down. So I suspect that a spike is coming with the S&P 500 above 20, probably around 22, maybe even 23. Now, the next chart I want to show is this is the semiconductor ETF, USD. So it's the Ultra Semiconductor Leveraged ETF by ProShares. And this fib sequence is from the low in March to the very high point of 116. Now, again, this is a leveraged semiconductor ETF, longing the market. And you can see that since approximately the beginning of June, we've been seeing a sell-off and trying a retracement and then a sell-off again. These stocks that are semiconductors that are tied to AI and also the tech stocks are going to be selling off. And this sell-off has been started in the beginning of June. Now let's go back to the S&P 500. What was happening at the beginning of June? It's at the top. It started to go down and try to retrace, and then it started to go down and it was trying to push back up. People were getting out of tech, out of semiconductors. It's retracing. People are thinking, oh, it's a good time to buy those semiconductors again or those AI stocks. There's a retracement and then people are getting back out again. And then it's starting to stabilize, trying to move in defensive positions. They're rebalancing. The S&P 500 is rebalancing. People are getting out of tech, out of the semiconductors. This right here is zoomed in on that semiconductor industry. And it follows the same pattern. It was a sell-off and then a retracement. So people thought, oh, semiconductors sold off too much, buy again. Oh, you know what? Let's get out. This is going to continue to fall. And so what I'm going to do is I'm going to short the semiconductor industry. Now, let's dive into some of the details. So I think the semiconductor industry is going to start to sell off. Why? For a multitude of reasons. I think that there's circular financing, the OpenAI and Anthropic's business model doesn't make a profit. There's problems with OpenAI and its IPO. I think there's some nefarious activities in marketing strategies for these AI companies. So I think that there's going to be investors just saying, you know what, short the damn semiconductor industry. Most likely NVIDIA's too hot. Now, NVIDIA has been selling off since May. So there's a high probability of this moving down. Now it's trading at 82.26. This is the long ETF, right? I want to short it. I think this ETF is going to fall. Okay. So it's trading at 82.26. I think this ETF is going to break the 79.43 barrier. That's the 50 cents. That's the 50% retracement. And it's going to be testing the 70.72. So I think this ETF is going to start trading closer to 70.72. And it's going to break the 80 support level. It's going to break the 50% retracement. Now, to benefit from this sell-off in the semiconductor industry, instead of purchasing USD. If you think the semiconductor industry is going to go up, you purchase USD. If you think that the semiconductor industry is going to go down, purchase SSG. That's SSG, which is the ultra short semiconductor from ProShares. And that's trading right now at 13.83, which is what I'm going to do. Because I think that this ETF is going down. So I'm shorting the semiconductors. Now, when that is happening, and I suspect that the VIX is going to spike. And the VIX is going to spike for two reasons: semiconductors and the war. And most likely, the 10-year yield will go down a little bit, and it'll go down faster than the 30-year, and the spread will increase. And TYD will go up and potentially test the 24 mark. And the S&P 500 most likely would be testing the 7,200. Natural gas, because of the war, is going to be somewhat buoyant, but it will want to trend down. And oil will continue to go up and most likely get closer to $90 a share. It's going to test the 87.23 and bounce down and then retest. So with that, that's the overall view of the market. Please help support the work that I do. I give a lot of information, and if you pay attention to me, I'm telling you how to manage your money, how to benefit from some of the events that are taking place in the news, and how you can position yourself so you mitigate risk. And I'm also telling you how to improve your health and wellness. So please help support the work that I do by getting the great products that I offer. And again, these are products that I take every day to help slow down the aging process. They work. And if you do them regularly, you get that compounding effect and it helps with your health. So please help support the work that I do by sharing the links and getting the great products that I offer on my store, the-studio-reykjavik.com. Thank you for listening and have a nice day.